Hi everyone, welcome to Thursday. And like we do every Thursday, we do a share and review. Today, we're going to take a look at Vital Healthcare and just see how that's been performing. Remember though that this is for educational purposes only, definitely not intended to be personalised financial advice. So let's take a look. I've got Vital Healthcare Property Trust up here on the screen and I've got it on the 5-year chart. And at a first glimpse, all I'm saying is this is a share that is in an absolute downtrend. May have sort of got a bottom period around where it's trading at the moment, which is about $1.80. Who really knows? But let's go and put our moving averages on. Now, for this one, I'm going to use a really slow moving average. So it's the 200 period. I'm just going to leave it as a simple. And you can see that we've got a really big arc forming, and the share has been trading below that basically since around September 2022. It's been on a decline, and that's what we've been seeing. No changes at all. In fact, if I zoom in, you can see this is Monday's trading, because I am recording this on Monday, and the markets looks like it's going to be down for this start of this week, even though there it says that it's got 0.5%. But anyway, we've had 2 negative weeks in a row. That's not a good sign. And in fact, when you look back on this share, every now and again we get a green candle, but it's predominantly filled with these red ones. Not something that really excites me too much at all. And in fact, a lot of the property investments that we're seeing at the moment, they are in a downtrend. I can't tell you why. It's just a fact. Let's go and change this moving average to our normal 30, and we'll make it the exponential as well. There we go. So you can see that Vital Healthcare started trading below that 30 period moving average at around the beginning of May 2022, and it's really just continued going down. We did have a brief period from around May last year until November last year where it did rise above, but then again it's continued on this downward trajectory, so it's not really that exciting. Let's go and put on our 15 period moving average as well, and there we go. You can see that the 15-week moving average crossed through the 30-week moving average again around sort of May 2022, and it's really just been trading below that. We had that brief period when it crossed up above it around June 2025, but then it's closed down again, and it really sort of crossed, gosh, it's hard to really tell, but it looks like it crossed at around December 25, and it's still down. And the thing to remember that when a share is trading below both those moving averages and they're declining moving averages, which we can see, that is a very cautious sign. And I know I talk about it a lot, but it is really important to protect your capital and make sure that you've got stops in place so that you know where you're going to get out, what your pain level is, how much loss you can really afford to take. So for me, I would not be getting too excited about Vital Healthcare property at all. Let's jump over onto the 1 year and just see what that's doing. Obviously, it's a little bit more noise, but you can see that we've basically had 4 days in a row where the market has fallen. We had one positive and going backwards, but it's just a string of falling days. So that is why I would not be wanting to invest into Vital Healthcare. Let's jump back to the 5-year chart and we'll take these moving averages off. And this time we're going to make a comparison against the NZSX 50. You can see here that over a 5-year period, the New Zealand Stock Exchange in comparison to Vital Healthcare is up just under 3.5%. But Vital Healthcare over that same time frame is down 38.4%. That's huge. So again, you've got to heed with caution when you are looking at shares. Now, one thing I'm going to talk about too is recently I have seen a number of shares doing capital raisings. Now, there's varying reasons for companies to raise capital. Something to bear in mind is they will offer the shares to existing shareholders at a discount on a certain trading day. So they might say that it's close of business as of Friday, the 15th of May, for example, and they will do it to a discount. So that means that if you're an existing shareholder, you can go and buy those shares at a discount. They will send you out a notification and you'll go through the application process. Sometimes they're scaled because obviously they want to raise a certain amount of capital. Now, something that you do need to think about and consider is that quite often the shares will come back, in other words, fall back in price to where that discount is. Doesn't always happen, but that's something that you do need to do your research on. And for example, for me, if I was looking at Vital Healthcare and if they were doing a capital raise, I would not want to be buying it simply because this share is in a downtrend. And if a share is in a downtrend, it's showing more capital to help plump it up, because when they put more shares into the market, you might see initially a price when they list, but generally they will fall back again. So again, if you're given the opportunity to buy a share because you're already holding it and they're doing a capital raise, just do your research. Make sure that that share is still in an uptrend, because if you're buying under a capital raise, you don't pay brokerage, which can be quite attractive, and generally you could be buying it at a slight discount. More often than not, you won't. If a share is in a downward trend, you lose that discount basically, because the market will come back to where that price is being offered. But yes, like I was saying, do your research and make sure that your share is trending up, because if it's trending up, hey, it could definitely be worth doing. And I have done that myself in the past as well. But we are seeing a lot of that at the moment. And a lot of those shares, like I'm saying, they are in downtrend. So I wouldn't really be wanting to participate too much, but again, do your research. So I'll just stop sharing. I really hope that's helped, because I'm wanting to help you with your share trading journey, help you get educated and learn so that you can create your own financial freedom. Just remember too, if you're really unsure about starting investing and how do I go about it, I do have a course that's available. Very good place to start your trading, how to learn how to invest. It talks about managed funds. It does talk about KiwiSaver, and it's a good insight as to where you can actually start trading. If you're a little bit more advanced and you are having a little bit of a dabble in the share market, then I hope these videos are helping you. Reach out if you've got any questions whatsoever, and I'm more than happy to do a video on it. So until next week, take care.